Totally ignored by the mainstream media, this is part about the truth here, is that the Fed accounted for nearly half of all Treasury purchases in the second quarter of this year. $164 billion out of $339 billion. In fact, the Fed bought more Treasuries than the next three largest purchasers combined. Now, what is that? Is that a Ponzi scheme? I mean, think about it. If that was being done by any corporation with its accounting, they'd be thrown in jail. It'd be called a Ponzi scheme. Go from one end, in the shell game. You know, where's the P? Where's the P? Well, guess what? The United States government is doing that with our debt. You've got one hand printing dollars. You've got another hand taking those dollars and buying debt, buying treasuries, which then gets serviced and goes back to the other hand. That is not only inflationary, it's patently ridiculous. And it's leading us down the road to ruin. How do we protect ourselves? Again, I go back to it, there's only one way. That's why gold is exploding. That's why silver is on the move. That's why the harder to get more esoteric metals, the silver, the palladium, the platinum, are surging. Ladies and gentlemen, as I speak, we spent today as a country $3 billion servicing our debt. $3 billion. If that doesn't stagger you, I don't know what will. That means, think about it, we have 356 million Americans. How much money does every American have to spend every day just to service our debt? It goes nowhere. It goes nowhere. There's no productivity out there with it. It just goes into a hole. Gone. Bye-bye. The more money's printed with no backing, the less and less and less it's worth. I talk a lot about the difficult issues that we have facing us, and I want to do a little history lesson, and this should be the final shock for the day and how we're going to end today's program. And that is to take us back to 1929 and the Great Depression. Most people feel and most people think that it was the crash of the stock market that led to the financial problems. It was the opposite. In 1929, there was a run on the banks. Why? Why was there a run on the banks? Because people went to the banks to get their money out. And what did they get? They got this stuff. Paper. They got paper. And they said, well, I don't want paper. I want my money. I want my money. I put good money in the bank. I want my money back. The banks didn't have it. Why? Because they took that money and they invested it. And they invested it in stocks, in stock offerings, in real estate, insurance. And the stock companies owned the real estate companies that owned the insurance companies that owned the stock companies that owned the banks. They all were intertwined and intermixed. And they were buying on margin. Heavy, heavy, heavy on margin. They were very leveraged out. So that when people went to the banks to get their money, all they had was this. But they didn't even have this. See, when I look at this worthless IOU, what I see on it, it says, this note is legal tender for all debts, public and private. But if you take one from 1930 or 1931 or 32 up to 1934, it said right here, it said, this note is legal tender for all debts, public and private, and is redeemable in lawful money at the U.S. Treasury or any branch of the Federal Reserve Bank. It said, the United States of America will pay the bearer on demand $5. Gold, silver are lawful money. Thomas Jefferson, quote, paper is not money, it is the ghost of money. Paper is poverty. Our country was founded, our entire economic system was based upon gold and silver being money, not this dreck. Now, when the banks began to have their problems, then the stock market crashed. And when the stock market crashed and all these banks owned all this stock that was heavily on margin, then the real fecal matter hit the rotary blade. And it all started to spiral. But then an interesting thing happened. There was a 50% pullback in the stock market. It bounced up 50%. After that initial drop in October, it came back 50%. And then it dove again. And then it came back. There were 6 what we call sucker rallies between 1929 and 1933, on the way down to an 89% total loss. That equates to our Dow going to about 1900 to 2200. We just had about a 45-50% bounce back up. We also in 1929-1930 saw a little green shoot recovery in the economy, just kind of like what we're seeing right now. We're on the same road. The difference is, back then we had the gold standard to protect the currency. We don't have that now. We're on the road to Germany. Now, the bottom line is that our banks are bankrupt. Like 1929, they all own each other, but worse, instead of just having margin, they have derivatives to the tune of trillions and trillions of dollars. They are so far out on a limb that it's incredible. The other thing is this. Our government has perpetrated a fraud. The entire pullback, the entire recovery of the stock market has been based upon the banks showing profits. I submit the banks aren't profitable. That the banks, it was a rule, FASB Rule 157, that had to do with their Tier 1, 2, and 3 assets and how they price those assets. Tier 1 is liquid, that you can just go and sell at any time. You know what the value is. Tier 2, not liquid, can't sell it. But there are similar instruments out there that you can relate to and price it that way. Tier 3, completely illiquid, worthless, and no market for them. Our banks have been marking those to market, putting them on their books at 98 cents on the dollar. They've been ignoring them completely at best. We don't know about this. Tim Geithner, the day President Obama said to the G20 that we have to strengthen our rules and regulations for our banking system, announced the suspension of FASB Rule 157 so the banks could lend money. Did they lend the money? No. They kept it. They paid off the creditors. Like with AIG, they paid off Goldman Sachs. I don't want to digress. The bottom line is that our banks have not gotten stronger. Our banks have not gotten more profitable. Our banks have not addressed the systemic issues that got them into trouble in the first place. It is business as usual. That's why CIT Group is going down, and going down hard. The bottom line, ladies and gentlemen, is we are at the face of a precipice, and you've got a choice to make. Do you want to protect your assets? Do you want to make money? Or do you want to bury your head in the sand and hope that doing the same thing that you've been doing over the last couple of years is somehow going to work for you? I submit, probably not. Do this. I don't know who you are yet, and I cannot do anything but speak to you here. Call 888-779-5374. Visit our website, www.spykermetals.com. Learn about us. Talk to us. Get involved. Until next time, have an absolutely fantastic day. May God bless you all.